Welcome back to Business Agenda. Well, fixed income dealer FIIG Securities and private equity firm Carnegie & Co. have joined forces to create a new joint venture business. Now, the business will source high-yield investment opportunities in entrepreneurial and high-growth companies for institutional funds as well as high-net-worth investors. Well, for more, I'm joined by FIIG CEO Mark Paton. Mr. Paton, look, thanks very much for your time today. Why now? Why do this now?
I guess over the last few years, as you've seen interest rates come down and the outlook being for a lower, longer interest rate environment, investors generally, particularly across the professional markets, are looking for higher yield investments. On the other side of the coin, as the banks have managed their credit risk demand post the GFC in a slightly more conservative setting sense, there are a lot of funding opportunities that professional investors are seeking to participate in. So this is about bringing the demand for better returns together with the demand for alternate debt solutions for corporate borrowers.
And do you see a gap in that market at the moment?
Sure. There have been a number of players in the market that have provided alternate debt solutions and, for mezzanine debt funding in property development and for acquisition financing for corporates. So certainly the alternate debt services business that we're building isn't the only provider in this space. But in terms of the broad distribution base that FIIG has got and the broad investor distribution base that Carnegie have got, bringing those two investor groups together creates a capacity for transaction size that perhaps hasn't been in the market previously. So we're talking about doing transactions in the sort of $20 million to $100 million range in the first instance.
And are you confident that there is the level of interest for the backing of the issuance and so forth?
We've been working on this business model for many months now and have a very deliberate strategy about it. We've been out and roadshowed it with both the investor side of the market. So we've spoken to quite a number of institutional funds, we've spoken to a number of family offices, and we've spoken to a number of boutique investment funds who are already participating in higher yield activities. We've also had a lot of inquiry from a number of corporate borrowers who are looking for debt structures that are further down the capital structure. So they might be subordinated debt, they might be debt hybrids, they might be debt with equity type returns. So we've investigated and validated this both on the investor side but also the corporate borrower side.
Look, I understand it's of a sensitive nature, but I mean, in terms of a pipeline, do you have deals in the pipeline?
Yeah, absolutely. So we have quite a number of transactions already in the pipeline as a consequence of that roadshow and as a consequence of sending that out. There are a couple of transactions that we're at the term sheet stage, and I would hope over the next 3 or 4 months or so to bring those to the market. We're not expecting to do hundreds of transactions of this in the near future. We're looking to do a small number of good quality transactions that offer investors yields and steadily build this offering over a long period of time.
And can I ask what it is that you're looking for in regards to the companies themselves, the entrepreneurs themselves?
Look, I think there's quite a wide range of corporate borrowers who are looking for debt at a level beyond what a bank might lend, or debt as an alternative to raising preference equity or preferential equity. So sometimes it's situational. So some companies, for example, are undertaking an acquisition. They might be a private company, or they might be a company that is looking to raise private debt as opposed to private equity. They could be a company that's undertaking a growth step, and for a short period of time the financing required needs to cover some development risk or some staging additional risk. But once that's completed, then the risk profile reduces and the long-term returns or the long-term cash flow and profitable generation from the business is more sustainable. So it could be situational. It can also be private companies. So one of the features of a number of inquiries we've had already are about private companies who don't like to disclose their financials. So when they want to go to the bond markets, for example, they don't want to go through an external publication of their financials or have a research coverage over the top of it. And so being able to privately place their debt with the professional end of the market means it can be, their financial positions can be contained within the relationships, just the relationships of the investors that go into that debt
Mark, can I just get your thoughts more broadly on the debt market? Does a venture like this, does it illustrate a maturing and hopefully a deepening, if you like, and a greater understanding in the debt market and what it can potentially have to offer within here in Australia?
I think that's true. Australia has a very healthy bank debt market, you know, a good contest around the bank debt end of the market. The bond market, you know, if you have a credit rating, works very well. And, you know, FIIG's been concentrating in our core business in giving access to the bond market for unrated corporates. So there's certainly a lot happening in the debt markets in terms of broadening and deepening the range of issuance. We've also put a lot of effort in being able to make that market available to a broader range of investors. If you look at the US capital markets and the European capital markets, and even to some extent the Asian capital markets, high yield debt issuance is has been a long established capability of those markets. There is some of that in Australia, and we're putting another proposition in the market alongside those other existing propositions.
Well, Mark Paton, really appreciate you joining us this evening. It's fantastic. Thanks very much.
Great. Thanks.